was like, what problem does this solve? And so I'm going to let you elaborate on that. Is that kind of the direction that the pain point that's really solved here is that right there?
So I suppose there's a few angles.
Okay.
So let's take that example specifically. If you have someone who has, a huge portfolio in crypto and
Welcome to the Stephen Lee Thomas Show, where we provide expert advice for real estate entrepreneurs. And I'm your host, Stephen Lee Thomas. And it wasn't that long ago that I was navigating the challenges of real estate investing, learning from my mistakes, and building the business I have today. I created this show to give you simple, actionable, step-by-step strategies to help you do the same. Each week, we bring you in-depth discussions with industry leaders and professionals who share their knowledge and practical tips. So sit back, take notes, and let's dive into today's episode. Hi, and welcome to the Stephen Lee Thomas Show. I'm your host, Stephen Lee Thomas. Today, our guest is Ricardo Johnson. Now, Ricardo is the founder of Oases. He's a pioneer in the space who's revolutionizing real estate investing through blockchain technology. I am super excited to have this conversation with Ricardo. I know a little bit about blockchain from my background in IT, but how can you apply that to real estate investing? That's what we're going to find out about today. Ricardo, thank you so much for joining me.
no, thank you for having me, Stephen.
Let's start off with, where are you located?
I'm personally located in Barcelona, Spain.
In Barcelona, Spain. So, one of the things I love about real estate investing is you can be anywhere in the world a lot of times and do real estate investing. So, you're in Barcelona, Spain. Where are your investments at? Are they around the world? Do you primarily invest in the United States, over there in Spain, Europe? Like, how is that working out for you?
So my personal portfolio is all in the UK. That's where I'm
Okay.
from originally. I moved to Spain about 3 years ago, so I've just been managing the properties and investing remotely. Um, I suppose that's what most people will have the challenge of being able to invest in different cities or different countries. So I decided to create a platform that can actually help facilitate that.
That is amazing. There's a podcast here in the United States, and it's called the Real Estate Guys podcast. And one of the things that I heard from them that I love is invest where it makes sense, and then live where you want to live, or something like live where you want to live and invest where it makes
Mhm.
sense. So I'll tell you, like, where I live in the United States, but I live in California, but I've never invested here. I've always invested in Texas, which is in the middle of the United States. So
Mhm.
I truly believe in that mentality, and I think it's great that you're making that more accessible for people. Actually, what's really cool is around the world. So, all right, this concept of blockchain and real estate investing. I remember this was years ago, 7, 10 years ago. There was a website I had gone to. It was called Patch of Land, I think, and you could invest in deals. There's a platform where you could invest in deals, but blockchain was 10 years ago, was a relatively new idea or
Mhm.
new technology in the space. So I'm familiar with that, but let's like rewind the clock a little bit. Tell us about your background and what led you to have this idea to even integrate blockchain and real estate investing.
So my background's in traditional property investing and management. So I started about 8 years ago in the UK and started to build out a portfolio and build out a management portfolio. So this was around the time where Airbnb rentals were starting to take off. And, in any like major city, a lot of landlords were trying to reposition their properties to be able to get and capitalize off, the extra demand that they can achieve. And so my job was really just educate them on how to manage their properties. Essentially, I can help you manage your property and build out a portfolio that way. Um, so over years, I managed to build out a management company, build out my own portfolio, and then started teaching people how to build their companies as well.
Okay, so that's your real estate background.
Mhm.
Blockchain, how did you come up? Like, tell us about your
Yeah.
blockchain journey.
So the blockchain part of it came left field, literally. So I was introduced probably like anyone else, pretty late to the party, and decided that I would want to actually, start investing myself. You know, when I learned about smart contracts and the real, I suppose, real world use cases you can have for smart contracts, that's what sparked my idea of, being able to tokenize real estate or tokenize any, real world asset, essentially. I think at this time, I was still late to the show. So there were actually a couple companies who were tokenizing real estate at that time. So I was like, okay, this is actually pretty interesting. And then I started exploring how I could do that myself. Around that time, this was around the NFT wave, where I suppose the barrier to entry in terms of being able to create your own smart contract, be able to access marketplaces and those things were pretty low. So it took me a while, but I was able to figure out and build my own smart contract and start tokenizing my own deals. And just with a small community of investors, we're able to essentially test the market with how I'm able to actually do this. Then literally from mainly all the issues I faced with that, running that company for 2 years, that's what gave me the idea to build out Oases, which is, a more fully integrated platform, which just allows people to onboard and start investing without the learning curve that everyone has to go through previously.
Awesome. Okay. We're throwing around some terms here, blockchain and tokenizing. There's still a lot of people who aren't even familiar with that. They just at this very, very, very high level, and probably immediately all of them are just in their brains going to like Bitcoin, Bitcoin. So dumb it down for us. Like help us understand. We're going to step through this. So blockchain, and pretend you're explaining it to a kid.
Yeah.
So what is blockchain? We'll start there, and then we'll talk about the tokenization of it, and then from there we'll move into how you can apply that to real estate investing. So we'll just start with blockchain. What is
So
it?
blockchain itself, think of it as just a distributed database. So just a database which holds data.
Hmm.
But instead of having one point of failure or one point where all the data is stored, is distributed amongst multiple places or multiple computers. Think of it that way.
Okay.
What this does, it enables a higher level of security, which means that everyone has the same information on each computer. So no one person can change it. And in the application of being able to, I suppose, tokenize assets and those things, it makes it a lot more secure to be able to have transactions rather than, I suppose, having it all in one place where someone could just change a figure and, the information is now changed, if that makes sense.
Well, it does to me because I have an IT background. Now, I never did any programming in blockchain, but databases I spent a lot of time in. And so having it decentralized and then multiple, the layers of authentication there, I totally, totally get it. Um, so basically you're saying that from a transactional perspective, it adds a higher level of security there, and authentication standpoint there. But then we're using this term tokenization, right? So blockchain is just really the way I'm understanding it and simplifying it is it's a way to decentralize the data so that you're lowering risk there, but then an added layer of security from an authentication standpoint. It's a data distribution authentication model, and I'm probably butchering that, but very simplified. Okay, so that's just data in and of itself. Tokenization. What is tokenization that kind of layers into the blockchain part?
So the tokens itself, I think the best way to think about it, because a lot of times, it's a lot of it's just terminology. If you even go to my website, for example, there's only one place where blockchain is actually mentioned because that part of the technology is only part of the transaction, if
Hmm.
that makes
Hmm.
sense.
Yep, yep.
Essentially, what you could think of it as in terms of tokens is shares. So when you think about owning shares within Apple or within Tesla and those things, you're owning a fraction of that company, and it's done through a share certificate. Think of a token as just a digital share certificate because each share certificate is individual,
Okay.
or each token is then an individual, which means we can trace where that token has gone. when you have shares, you can't necessarily trace where that share has gone, you know. So think of it like in those terms. We just interact with it in a different way, but essentially it's the same thing. We're just tokenizing the actual shares. So if you have one share, we have one token. We have 100
Gotcha.
shares, we can have 100 tokens, if that makes sense.
Yes, that helps a lot. So now what you're doing in your platform's name is Oasis, is that correct?
That's correct, yeah.
Okay. So if to find you, what is your website?
It's www.ownoases.io.
Okay. So ownoases.io. And I'm going to go to the website. And is it a way, is that a place where I can go as an investor and then go invest in deals using I'm going to use a term loosely here, cryptocurrency? Like, walk me through that process of I'm going to go to this platform. What does that look like? How do I use it? And how do I acquire real estate?
So think of it as any other investment platform. If you're using Vanguard, for example, to buy shares, you would download the app, you would sign up your account, you complete the know your customer process, and you can fund your account and start investing. It works in exactly the same way.
Okay.
So you would just sign up online, you'll get access to the actual platform itself. You would then create your account, and then you can explore the different projects we have on the actual platform. So you don't necessarily have to even make your payments within crypto. You can make your payments from your credit card or from your debit card, as well as we take crypto payments as well.
Okay. Multiple types of crypto?
At the moment, USDC, which is I suppose the dollar equivalent, just the US dollar.
Okay.
And we can also take Ethereum and Bitcoin.
Gotcha. Okay. And advantages or disadvantages of now you said credit card, but advantages, disadvantages of using normal currency versus a cryptocurrency. And am I using that term correctly? Should I use the term cryptocurrency or
Yeah,
should I
yeah,
call it token? Okay.
yeah. Could use that.
Okay.
I suppose there isn't any. I mean, on a platform standpoint, it's just easier for onboarding. So if you're not necessarily a crypto native user, it's easier if you can just use your bank card as normal, as you would do a normal transaction.
Okay.
So it just depends on what you personally prefer. But we have users, for example, who got in Bitcoin super early, for example, made a load of money, and they want to use that to invest. So it's easier for them instead of having to, sell their Bitcoin for cash and then transfer the cash. It's easier for them just to make the transaction within cryptocurrency.
Okay. Got it. Now also as an investor, do I have a way to do instead of a credit card? So for example, my deals, I'm typically raising my minimum investment's $50,000. Now on your platform,
Mhm.
maybe there's a way to set that up differently. Could I also connect like a bank account to it and fund it that way, more like a wire through
Yeah,
the
yeah,
account?
exactly.
Yes.
You could do
Okay.
wire
Okay.
transfer as well.
All right, but what I love is what you just said was if you have this cryptocurrency, and maybe because I know some people who got into it very early, and did very well, but they've got this currency. Well, what do they do with it? Now you can use it and invest in a tangible asset, is what I hear you say.
Exactly, exactly.
And so one of my questions to you is like, what problem does this solve? And so I'm going to let you elaborate on that. Is that kind of the direction that the pain point that's really solved here is that right there?
So I suppose there's a few angles.
Okay.
So let's take that example specifically. If you have someone who has, a huge portfolio in crypto, and obviously we can see how volatile it can be, in
Mhm.
different cycles. This is a great way to actually diversify their portfolio in something that's actually stable because it's a real world asset. It's real estate. So you can have a stable asset which produces passive income, which you can trade within the actual platform. So you have the liquidity of the actual asset there, the same way you do with your cryptocurrency. It's just that it's not going to fluctuate the same way as everything else because it's backed by the real world asset.
Gotcha.
In
Okay.
terms of Yeah. So in terms of like, and you mentioned, for example, your investors is like a minimum of 50,000, for example. One of the key things that tokenization really solves is making it more accessible for people with lesser incomes. So instead of having to have 50,000 or in a traditional sense, anyone to purchase, a real estate property, maybe even hundreds of thousands as a deposit, with tokenization, they can actually invest with hundreds of dollars. So if they've got $500, they might have $5,000 because they're buying a fraction of the property. They can actually invest without taking on any mortgages, without taking on any debt or of any of that
Mm-hmm.
sort, and have real ownership within that asset.
Awesome. Okay. So it actually allows more people to invest. It actually opens a
Exactly.
door for a lot of people to start investing in real estate. Um, for people to be able to invest using your platform, can anybody do this? Can they get, I mean, they probably have to be like 18 or over, something like that. But who are the type of
Mhm.
people that can leverage your platform to start investing in something today if they wanted to?
It depends on where you are in the world,
Okay.
because different jurisdictions have different rules on who can take part in these type of opportunities. So let's say for the US specifically, because our tokens are regulated with the SEC
Hmm.
under Reg D, it means that only accredited investors can take part in these token offerings.
Okay. So now all of a sudden my brain is going down this direction because you said Reg D. So if I was to do, could I do an investment where I'm allowing non-accredited, sophisticated investors and accredited investors, but only through your platform allow accredited investors? Does that
Uh,
question make sense? Now,
that
you're not
question
an
makes
SEC
sense.
attorney, so I'm not putting you on
Yeah,
like you have to talk to your
exactly.
SEC
Yeah.
attorney, but from a technology standpoint, I
It
would
all
imagine I can
depends.
probably set up some rules because on your
Mhm.
on your platform, you probably are doing some qualification of those investors.
Exactly. Yeah. So
Okay.
there's a whole qualification process. Um, you have to do the KYC process in terms of like have your identity verified as
Hmm.
well.
Hmm.
This anti-money laundering process as well. Is it, because it's highly regulated?
Yeah, yeah,
There's
yeah.
a few hoops to jump through, but that you can do them pretty quickly. Essentially, for what you're talking about, you would need to do a Reg CF, which is like a crowdfunding
Okay.
round,
Okay.
which is open to non-accredited investors. So any person, essentially, retail investors can take part. There are limitations as well to that, and obviously different um, compliance requirements that you're going to have to do, but it is definitely possible.
Okay.
For our platform, it just wasn't suitable at this point. Eventually, we do want to open it and be able to have non-accredited investors. It's just, as we're starting out, it's just a much easier way to go
Yeah,
to
no, no,
market.
I completely get it. So what I'm imagining is, I'm raising capital for my deal. Now I can get investors from multiple pools, and what I do is I'm going to build a capital stack,
Mhm.
meaning, generally the bank is the biggest investor, right? They
Yeah,
invest, they
yeah,
come in, and then if I needed to, I could do preferred equity, I could do private equity, and then I
yeah,
have my other pool of investors. And um, but I can get accredited and non-accredited investors. So um, and you have a pool. There's pros and cons, and there's advantages and disadvantages. And one way is you can publicly advertise, and another one you can't. If you're getting non-accredited
exactly.
investors, you cannot advertise the deal. Um, so then another question there. You said you're doing Reg D. Does it have to be a Reg D so that it can be put on your platform because it's considered advertising because you don't have a pre-existing relationship with those investors?
Technically, yes. Technically,
Okay.
yeah. It's just, and we also do a Reg S as well, which means that in terms of like global investors, um, but yeah, it's just a much easier way to be able to market our offerings. It just means that there's restrictions, so
Okay.
not anyone can invest.
Okay. Um, if My wheels are still spinning here from the opportunity that might be in front of me and the listeners, because
Hmm.
what you've done is you've created a global marketplace, right?
Hmm.
For people to invest in deals. So I could, as an investor, go to your platform and I can start shopping around for deals that I want to invest in. Or I could, as an owner, have a investment opportunity on your platform and people from all around the world could potentially invest in that deal. Am I understanding that
Exactly.
correct?
Exactly. Yeah. So how it works is that we actually partner with developers. So these are specifically like resort developers. So they're building, an apartment complex within Dominica Republic. It could
Okay.
be, a resort of villas within Bali, for example. We partner with them, and then we market their offerings to our pool of investors. So it's much easier for people to invest in overseas opportunities, without having to jump through a million hoops trying to do it individually, without having to have hundreds of thousands of dollars to be able to take part. This is a nice and easy way that they can actually diversify. So if they wanted to have a portfolio of properties from all over the world, they can do so, you know?
If you're enjoying the podcast and want to fast track your way to becoming a full time real estate entrepreneur, then join the Multifamily Mastery Hub on School. You'll get access to our educational course library, live trainings, live interviews, and a community dedicated to helping you succeed. Visit school.com/multifamily mastery hub. That's SKOOL.com/multifamily mastery hub and fast track your way to becoming a full time real estate entrepreneur today. If okay, so clarifying the types of investment opportunities on your platform. One of the things I heard you say was new construction. So for
Yeah.
me as an owner, all of our acquisitions are not, none of them are new construction, they're existing construction.
Hmm.
Is that an opportunity for someone, if I came to you and I said, Ricardo, I've got a deal. It's not new construction, but it's a 200 unit property. It's, built in the 1980s. Is that something that would potentially qualify for being an investment opportunity on your platform?
It depends. It depends.
Okay.
One of the reasons why we don't necessarily solely focus on new construction, it just means that there's a bit more upside for investors in terms of the capital appreciation by
Mm-hmm.
getting in at an early stage. Although they may have to wait 6 to 9 months while that project is being developed, it means that once it's developed, it's already locked in capital appreciation in that, so they can take part at that stage. That's one of the criteria why we do it that way. Um, Reason being is because technically we're competing with crypto returns. Although it's a lot lower risk, the
Uh-huh.
type of returns that you would expect within crypto when you're making, investing in whatever meme coin or whichever token you want, um, people are looking at a much higher upside. Whereas with real estate, we're in you know, real world appreciation. So this is a good way for them to get access to that.
What does that
Existing.
competition look like? Sorry to interrupt you, but
Oh, it's
what
high.
is that? Because I haven't invested in crypto before. And part of that is
Okay.
ignorance. I don't know. When I look at it, I'm like, ooh, it's risky. I know the reason why I think it's risky is because I don't know enough about it. Because like apartments, like I can underwrite it and I can tell you like exactly what's going on, but just because I've
Yeah.
studied it for years. And I just haven't had the opportunity to dig into crypto. So I honestly I have no idea what the returns are like at all. So what am I competing against as an apartment owner if I was to want to get something on your platform? What do the returns need to look like?
I feel in general, and my personal opinion from my experience, is that crypto returns can be far higher, but the risk is also far higher than anything else. So it's hard to pinpoint, exactly um, what those returns would be, but the
Hmm.
appetite for that risk is much higher. So, for example, it's a bit like if you were investing as a VC or investing in, private equity, you're taking a higher risk, but your return is expected to be far higher. So, for example, I've been able to experience 10x on some investments,
Over what
maybe even
time frame?
5x within a year. It depends on where you are in the cycle, the tokens that you invest in. Let's just take I don't know, Ethereum, for example. I think the price now is around about $2,500. 3-4 years ago, that was, $200, $300. So for people who are able to invest and hold it for a long, well, not say a long period of time, but for semi-long period of time, you're able to get a lot higher results on your investments. But then you have a lot of stories where people invest and they leave with zero. That's also happened to me also. So it all depends. The point is that the people who typically invest in crypto assets, cryptocurrency, they have a higher risk appetite. So present, for example, in your field or in our field in real estate, presenting a double-digit return on your investment is people are biting your hand off for it, because it's actually a great return. If you can return 12, 14% on a real estate investment, that's very, very good, when it's typically 6, 7, 8%. In crypto, that's not as appealing, put it that way.
Gotcha.
So that's what I mean in terms of the competition.
Are you finding that, so there, yeah, it sounds like you're in a bit of a paradox there. Like, so you've created this opportunity to invest in a tangible asset, but you're competing against what the potential return is higher using crypto. So the people that are going to want to leverage your platform to invest in real estate using crypto, are they actually really looking for that high of a return? Or are they looking for something maybe a little bit less volatile?
Exactly. So something less volatile. So in terms of the return, it can't compete. Your property is not really it's going to double, but maybe in 10 years time, 15 years time, for example. So it can't physically compete in that sense. So it's the stable returns that they're looking for with real estate assets.
Okay.
However, it still has to be appealing. It still has to be something that, so as you mentioned, you live in California, but you invest in Texas, maybe where the returns are a bit more appealing for you, a bit more exciting for you to actually invest. Maybe the opportunities are bigger. Maybe the cost is lower. So that's that. So for example, what my job is now is to find those opportunities on a global scale, to find where are those emerging markets, where are the returns far higher, and trying to, using different, tools and stuff to be able to predict these and create models and present them to the investors.
Gotcha. Yeah. So if, for example, the deals that we're looking at, we are underwriting to a minimum of an 80% return over the course of 5 years, but 80 to 100% return in 5 years. So if
That's pretty
you
good.
average that, annualize it, you're 16 to 20% average annualized returns.
Yeah.
So the way it works, though, is there's a cash flow component, and that's right now just debt markets and where valuations are of properties. It's the cash flow component on it, year 1 and 2 is probably closer to 5 to 6%. And then it's going to tick up from there as you get into years 3, 4, and 5. And then where you've got the big return is on the exit. And if you can do it faster in 3 years, fantastic. If you need the 5 years because of the market cycle, but that's what you're going to be looking at there. And now I don't know how this works with crypto, but there's also tax advantages because of the depreciation.
I see.
Right. So, and I don't know, so we can jump over there for a second. And I don't know if you've tackled that yet, but so when I'm going to back up just a couple steps. So when I say if I can get 80 to 100% return investment in 5 years, so that's average annualized returns, 16 to 20%. Are the deals that your investors are investing in on your platform, how long is the hold? I mean, would that align? And I'm speaking on behalf of a lot of people that I know are, in the market I'm in or in similar markets, and that's kind of what their target is. Is
Yeah.
that starting to get closer to something that would
Yeah.
be more appealing to a crypto investor?
Exactly. In terms of the type of deals that we secure in Oases, they're comparable to what you're talking about in terms
Okay.
of, 100% within 5 years.
Okay. All right. Okay. So that helps there a lot.
Yeah.
And so because there might be a lot of people listening to this who are like, ooh, like there's an opportunity there, and I might be able to, get a good pool of investors as long as the returns have the right alignment with the investors using your platform. Now, so now I'm going to jump over to I don't know how it would work, the depreciation thing, and I'm going to frame it up this way. So, as an investor in the United States, we get to leverage, and I don't know what it's like in other countries. They probably have some similar things depending on the country, but in the United States, we get to leverage depreciation, and we get to take that as a write-off against our gain. So, for example, my CPA has told me I never want to know how much money you're actually getting in your account. I just want your tax documents, like the K-1 document. Like, just give me that. Like, show me your gains or losses on paper. And I'm like, all right, cool. So that works. But I also recently just invested in a deal using a self-directed IRA. I don't get to
Mhm.
take advantage of the depreciation using my self-directed IRA, right? It's a different investment vehicle, and it doesn't qualify for the depreciation reduction. Do you know, like, have you come across that in the crypto type investments? Do you get to leverage the depreciation? Is that something that factors in?
It's something that I've been asked
Okay.
whether they can, because I know that's part of their investment strategy.
Hmm.
Um, in this case, we don't. In terms of how the SPVs are set up, the special purpose vehicles, and the tokens, we benefit from, I suppose, tax advantage because we're, located in a tax efficient location. However, there's no depreciation. We can't write off the depreciation at this point.
Okay. So then what doesn't surprise me, um, but you did mention there are some tax advantages, I think is what I heard you say. How does that work?
Not necessarily on a personal level.
Uh-huh.
However, how it operates is that at the moment you can't take let's say a property deed and you can't tokenize a property deed, if that makes sense.
Hmm.
So how
Hmm.
tokenization works is that we acquire the actual property assets within an SPV, so it's within a company, and those shares of that company is tokenized. So there's a like for like. So we create a company with 1,000 shares or ten
Uh-huh.
thousand
Uh-huh.
shares. There's 10,000 tokens, which represents each share. So what you're owning is a share of that company, which owns the actual asset. If that
Okay.
makes sense.
It,
So
it
the
it
the
it does. And so what I'm thinking of is like a PPM, a private placement memorandum, where you're basically saying, here's
similar, yeah.
the shares. So then where my brain is going right now is let's say I came to you, Ricardo, and you're like, yep, Steven, this is fantastic. Like, I love your deal. Let's put it on the platform. Um, the attorneys that I'm going to be working with, the SEC attorneys, is that through you? Do you guys have SEC attorneys lined up that's part of your team, or do you have some that you work with because they understand your platform, or do I bring my attorney and have them talk to your team? How does that work?
So we would do it ourselves. So
Okay.
we have our own attorneys that would actually file the filings that we need to do. Essentially, because we try to standardize it um, to make it easy and efficient. So that's just the easiest way to do it
Okay.
at
No,
this
I
point.
like that. I think it's clean. I think it's clean because otherwise you're going to have to deal with 1,001 different
Yeah.
attorneys across the world, and every one of them is going to be different, and they're all want to negotiate and have their own wording and verbiage, and you'd have to have this huge legal team just to manage that conversation alone. So I think it's definitely a smart business decision for you guys to bring that in house. How long have you guys been doing this?
So we've been tokenizing since 2023. In terms of Oases itself, I've been building that since February last year, and the platform actually launched earlier this month.
Oh,
So
okay.
not very long.
So you're just getting started with it.
Yeah,
Do you have active deals right now on the platform? You're working on
yeah.
getting funded. How is that process working out for you guys?
Um, it's challenging, I would say. It's challenging. I think the main barrier is the education because it's something new.
Hmm.
The type of investors who want to get involved is being able to, make sure they understand what they're investing in, how to interact with the platform. It's pretty much intuitive, but because it's new, obviously people have a lot of questions and
Hmm.
need kind of we essentially hold their hand and onboard them one by one at the moment.
Gotcha, gotcha. Those are your investors, the people that are like, you mean to tell me I can use my crypto to invest in real estate? How does that work exactly? That is what
Yeah,
you're okay.
yeah, exactly.
How are you finding that pool of crypto investors?
Um, it's different, I suppose. I think what I touched on it before in terms of the investment expectation. Um, yeah, so it's a bit different than like the traditional real estate investor. Um, I think traditional real estate investors, they come with already a wealth of knowledge, like yourself, wealth of knowledge and experience in terms of the actual real estate deal, in terms of doing the due diligence themselves. So we present, everything that we have, but I always encourage people to do their own research, do their own due diligence
Hmm.
on
Hmm.
themselves before actually taking part. Um, I suppose if you're not used to doing, real estate research and, appraising deals yourself, it can be tricky. So yeah, to be honest, because it's such a new space.
Hmm.
I know that it will evolve over time. So our ethos is to really bring you the best deals, and then we'll bring the investors in on the back end.
Gotcha. Okay. So you were you're saying you're new to the space. My question was going to be, where do you see this in like 5 to 10 years from now?
So it's been a growth. I think it's around about 21% per year on average in growth of actual assets which are coming on chain, like real estate
Hmm.
assets coming on chain. The main use case at the moment for real world assets is stable coins, which is USDC, USDT. But we're already seeing, tokenized, artwork, tokenized luxury watches. And so tokenized real estate is really a big application of that. Over the next 5 years, I think it'd be more commonplace to understand that these opportunities are available.
Hmm.
So naturally, more people will gravitate towards it as an alternative to traditional real estate investing. Um, I I think by then also, I know we touched on a bit of the compliance and regulation. I think at that point, because of the increase in demand, um, I feel that they would be able to adapt these rules to make it more accessible. I think more and more people are becoming investment savvy, more sophisticated investors who are not necessarily accredited. So I think at some point they would, be able to amend these regulations to allow more people to take part.
Yeah, technology, like it is moving so amazingly fast right now. I mean, I'm gonna jump over to AI really quick. Just I remember using, for example, Chat GPT when it first came out, and like, has it
Mm-hmm.
even been 2 years? Like, it's not been very long, and it's just like how quickly it's evolving. And I mean, I remember when I heard of this thing, blockchain and Bitcoin, I'm like, oh, I don't know, like I don't think it's gonna last. And then look at where we're at now.
Mm-hmm.
So, do you think that eventually that this type of investing could replace the, how we're investing in real estate? Do you think it will replace it altogether, or you think it'll just come in and it'll be much bigger part of real estate investing in the future?
My sentiment at the moment is that I think it'll be a bigger part of it rather than replacing it altogether. At the moment, the main buyers for these assets are institutions who have big treasuries that need to deploy capital. I think eventually we'll get to the stage where, as I said, it'll be accessible to more people, and it'll just be another alternative. It might be in our lifetime. Eventually, I think everything will be tokenized. Everything will be digitized within
Hmm.
our lifetime. So at that point, it's just easier for people to, instead of having to go through, the conveyancing and the legal process of purchasing real estate that takes, weeks to months. You should be able to. Now, the technology is already there for you to be able to purchase it within minutes. So it just takes the governments to catch up to that to make it accessible. So eventually we'll get to that stage where deeds are, digital rather than, physical deeds. And
Yeah,
we won't get rid of lawyers altogether, but it would just be an easier process.
yeah, the it's becoming a more and more global type economy every day. I don't know that we'll ever like truly get there. because of lots of reasons. I won't get into the politics of it, but
Exactly.
right. But yeah, I mean, we are a global economy. There is no way around it. I mean, that's just how we are, and it's only going to become
Mhm.
more and more prevalent as time moves forward. What advice would you give someone who's listening and just getting started, and how can they educate themselves and move forward here?
In regards to tokenized real estate or just
Yeah,
real estate in
tokenized real
general?
estate. Yeah.
I think a good place to start would be my website. We have a learn section where you could, read the different articles on there and at least get a good overview of what is taking place and where the future is heading towards. That will at least start preparing you. I think you've got a great mind in terms of you're looking at maybe opportunities where you can actually leverage this technology. If you're in a similar position to you when you are, securing deals and investing, you can always just reach out to me and I can actually point you in the right direction if this is something you want to explore further. Um, at the moment, I wouldn't say it's easy to tokenize, but it's becoming easier. It's definitely becoming easier. And I feel like there are an emerging sector of investors who are looking for these type of opportunities specifically that wouldn't necessarily be in traditional real estate investing. So there are opportunities growing here.
Awesome. So Ricardo, I mean, I could go on and on and on, and I'll probably talk to you more after we end the call, after we close out the show here. But how can people learn more about you and actually get started investing on your platform?
So you can connect with me on LinkedIn, Ricardo C. Johnson. Go to their website, ownoases.io. You can easily just sign up there. You'll get directed to the platform where you'll be able to log in and create your account. If you just want more information, just connect with me on LinkedIn. That's probably the best place. Maybe Telegram is Rico C. Johnson. I'm happy to speak to anyone, answer any questions, and help people start investing.
Awesome. Ricardo, thank you so much for taking the time. I'm looking
Thank you,
forward to
Stephen.
checking back with you in like 3 months, 6 months, 9 months. Like I want to be
Mhm.
in touch with you. I think there's a huge future here, a huge opportunity. I'm excited for what you and your partners are doing. So thank you so much for joining today. I really appreciate it.
No, thank you very much, Stephen. Thanks for
Absolutely.
having me.
Absolutely. So I'm your host, Stephen Lee Thomas, and I'll see you in the next episode. Thanks for tuning in to the Stephen Lee Thomas Show today. And if you found value in today's episode, then I have a favor to ask you. Please share it with friends, family, and anyone who might benefit from the insights we shared today. Also, don't forget to subscribe and leave a review if you enjoyed the show. And if you aren't already part of our school community, then head on over to school.com/multifamily mastery hub and join today. And again, thanks for tuning in, and I look forward to connecting with you in our school community.